Hi, welcome to the Market Alert for Wednesday, 23rd of October 2019. So, according to the Forbes article from yesterday, Bitcoin is poised for a sudden move, major move, according to them. And this is predicated on the fact that Facebook are not going to develop the Libra crypto that they were going to. And according to this article, as it becomes more obvious that the Libra thing is not going to take off for a long time, if ever, then you can see, and this is the important bit here, this is what I was after, that institutional investors are increasing their bets in the Bitcoin price is going to move higher soon, with financial institutions more than doubling the value of the long position it holds in Bitcoin futures contracts this month. So the institutions are already buying and accumulating futures contracts with prices down at these levels. So as we look at the daily chart, we can see that we've got this sideways range with a look of the 770 level, 7770, being tested at some point after prices failed to close above the 200 MA. They've continued to move lower. You see this in the 4 hour, it's still sideways as prices came up, had a look at the 200 MA, and the 15-minute yesterday was just very tedious. Eventually it broke the 200 bar moving average, with the 20 also coming back through this. Had already gone through the 50, and then prices have actually picked up on the overnight, where we've seen prices drop quite sharply, but the overnight's no good to us. We'll see how things pan out in the day session today. Now what's interesting here is you can see these spikes to the downside, and then prices trade sideways. So this is also indicative of the big traders managing to mark prices down on the overnight market and accumulate more as well. So pure manipulative move there. Meanwhile, in the stock markets, let's start off with the Dow for yesterday. No news to move the markets this week until tomorrow. I don't think there's anything today apart from the crude oil inventories. No, they're already out. So not a lot to move the market. You can see this trading down towards the 20 bar moving average yesterday. And the reason for this is that stocks sink on momentum meltdown. Again, momentum stocks moving lower. But Biogen and Boeing bounce. But still a bit of a meltdown that we see here. So yeah, prices moving lower yesterday. This is yesterday's bar heading towards the 20 bar moving average on the overnight. So in yesterday's trading session, the market was fairly quiet. In the pre-market session, prices closing below the 200 MA. They came up and had a look at it and then closed back, and then they drove through, hit with selling pressure, and then came back. But what's key here is the DP level. The DP level and the 200 MA is absolutely stunning when used in combination. So prices opened, they moved lower, they traded to the DP level on two separate occasions there. Also you can see that we've got, when the market rallied back, it was at 76% or thereabout, and then came back below the 200 MA, and then prices staying below this until it managed to then start to move higher, shook out the traders. And where does the market come back to once it's taken off from the DP level? It sits at the 200 MA and then moves higher, comes back, goes back above the 20 bar moving average there when everything starts to move in the right direction. And then we have the weakness come into the market, so we go through the 200 MA. Where does the market stop? At the DP level, comes back up above the 200 MA, makes no progress, and then moves to the downside. And then overnight, we've seen continued selling here, with prices moving lower until they buy back here. You can see the profit taking, short covering, bringing the market back and is now making its way back to the upside there. So what I will be looking in here for are these two levels, the 200 MA and the DP. See if the market gets above this, then watch the DP level for this market. And implied volatilities for this market, let's have a look. We can see yesterday this pulling back slightly, which is odd given that the market moved lower at the end of the session, but the traders aren't seeing too much of a risk in this. I would beg to differ that there's something not right with this market at the moment. It's definitely being manipulated and held. No doubts about that at all. So you can see that it's the implied volatility has been increased, and some traders are concerned about this. They might not be on a day-to-day basis, but certainly when you step back, look at the bigger picture, you can see there is some weakness here. So we've got lower highs here and a lot more frequent corrections as well in this market. While we're here, 10-year, same as Monday, so we're definitely out of the inverted as far as the 3-month 10-year yield curve is concerned. And we've also got Deutsche Bank moving slightly lower yesterday, heading back towards the 200 MA as well. An interesting thing politically, nothing to do with the UK, but Elizabeth Warren, one of the Democrats runners for the 2020 US election, has written to Steve Mnuchin asking why they are printing so much money on the overnight markets, and she wants a reply by the 1st of November. She said something's not right. I'm not fond of the woman. I'm not fond of any politicians, frankly, but give her a due. She's actually asking the questions that everybody else should be asking, and they're not asking. So that is something to keep in mind as well. She's very concerned about any sort of crash. And speaking of car crashes, Brexit has an impact on the pound yesterday. Can't quite figure out what's going on with that, frankly. I'm not really that interested. As I've always maintained, we'll never leave anyway, so it's just a case of taking the money off the table as far as the pound's concerned with what's going on. As far as I'm aware, that there's not going to be a vote on this new deal that Boris has got, and they're looking for an extension. And this is reflected here, as you can see, when the vote came back yesterday, and then prices are moving lower. And as I've said, the more uncertainty that we have with this, then this is quite easy to work out where this is going. No deal uncertainty means prices moving lower. You can see there that given the news that there was going to be a deal from the EU, they got the deal. Now Parliament doesn't like the deal, and now we're going to just let's go back to where we were. If we get an extension, then it's going to be even worse for the pound, the uncertainty going forward. So you can see the market just flirting with the 200 MA yesterday. Eventually it broke, moved lower. See the buying coming in here at the price level here, which is around the 129 level, 129. You then got your 76% retracement back up to the 200 MA and the DP. Market went through, traded up to the high of Monday. Then the result of the vote in the House of Commons came out and prices moved lower. And overnight prices are drifting lower because of what I just said. We've got uncertainty in this as far as the pound is concerned. So we'll see how this pans out today. I don't know what's happening politically today in the House of Commons, but I would imagine... I'll tell you what, let's have a quick look, see if we can get some idea. Well, according to the news, we've got a bit more can kicking. If we don't have kicking the can down the road for QE, we've now got it for Brexit. So apparently EU poised to accept Brexit delay request after PM pause deal legislation. So, well, there you go. So, another delay. So all of these numbers at the top, as they were before, completely superfluous and pointless. And, expect more of the same. And as I say, economically, that's just going to have more of an impact on the pound, and you can expect to see that move lower as it creates more uncertainty. until ultimately we don't leave and the whole thing's just discarded. Right, that will do it for this one. If there is anything to report today, I'll let you know, but otherwise, as ever, thanks for watching. See you in the next one.